Hello and welcome to Moneypuzzle.in. Today we are going to be talking about a brand new investment option, new kid on the block, Bharat Bond ETF. Joining us for this discussion is Radhika Gupta from Edelweiss Asset Management. The asset manager has spearheaded design and execution for this product, and Radhika is going to talk to us about what makes this a suitable investment option for you, how to go about it, and of course how it compares with some of the other investment options available to you. Let's get straight to it then and meet Radhika on this discussion. Hi Radhika, thank you so much for joining us on this discussion. Bharat Bond of course has been making waves, and I just wanted to start out with the very basic, like what is a Bharat Bond? Because as the name suggests, it's not just one bond, is it?
Yeah, so it's actually Bharat Bond ETF, and as you very correctly said, it's not just a bond.
Right.
It's an ETF or a fund vehicle that gives you access to a basket of bonds, and that basket is very important. What are those bonds, which is why the name Bharat? It is essentially India's best public sector company. So it's AAA rated public sector entities. They could be companies like NHAI or NABARD or PFC or REC, public financial institutions. All these companies and AAA rated ones.
So AAA meaning highest quality.
Highest quality. Yes. So essentially it's a simple debt product that is giving you access in as little as 1,000 rupees to a basket of India's best bonds, public sector bonds. That's really what Bharat Bond is.
Bond ETF.
Is Bharat Bond ETF, yes.
Yes. So, okay, great. So, basically, let's now just assume that the whole basket is worth 1,000 rupees.
Yeah.
And it's then what happens if I invest in it, then I get some units from that basket, right? Of this different, all the bonds put together. So, if I put 100 rupees, then, and assuming that each unit is 10 rupees, then I'll get 10 units. And those
No, so the starting size is 1,000 rupees, yes. So, if the entry NAV was 10, then you would get 100 units. And then each of those total units would represent ownership in 8 to 10, I would say, public sector companies. Bharat Bond ETF, like all ETFs, follows an index. What is an index? Very simply, it's a way to benchmark. It's a set of rules that defines what the ETF will hold. So that index, which is now published by NSE India on their website also, will tell you what the constituents, what Bharat Bond holds. So you can actually check it out. You can see it, and that's kind of very nice because you have total transparency as to what Bharat Bond will hold today, and there are rules that will define what Bharat Bond will hold in the future. So there are no surprises.
Right. So it can change the index.
It can change
based on rules, or who can change it? Or?
So there are three very clear criteria. To qualify for the index, you must be a central public sector enterprise. You must have a AAA rating, and you must have issued a certain amount of bonds. We are launching a 3-year product and a 10-year product, so that there is adequate liquidity. You want to hold issuers that are liquid. These are the 3 criteria you have to meet to qualify for the Bharat Bond index. And different members of the index will have different weights basis their amount outstanding. So it's actually very simple, but it's transparent and it's written out there. And the value of the index is published every night.
Every night. So you know what you're investing in, you know what it's worth every day of the year. But you know, when I buy this 10 units, say, what am I getting? What am I really buying?
So you're buying bonds. Today, you know, it's interesting, if you wanted to buy a bond of NHAI, which is National Highway Authorities of India, you probably can't do that with less than 10 lakh rupees. If you wanted to, and NHAI is one of our best rated issuers, with Bharat Bond, in your 1,000 rupee minimum investment, you'll get say 100 rupees or 150 or whatever the index is, worth of NHAI, similarly of NABARD, similarly of PFC, similarly of RFC. As I said, there is an index. So the index has a yield. Each bond will have a different rate of interest. So the rate of interest on Bharat Bond or the yield on Bharat Bond will be the average of all these different companies.
So all these bonds, like other bonds do, they have a interest coupon, and that interest gets paid and gets back put into that basket. And then that basket accumulates all the interest and divides it again among the unit holders. So that's what I get. I get a return from these bonds, but in a kind of an aggregate form from all the bonds. And I get, of course, you know, I can see what is happening, and I get what you were talking about earlier, liquidity. So I can see the price every day, and I can also move in and out?
Yeah, so I can move in and out without any penalties, which is nice, and I can do it on the stock exchange.
Okay.
So that's an easy option. I like to say that Bharat Bond actually is the combination of 2-3 things.
Right.
It trades very similarly to a stock, which you're used to.
Yes.
It's diversified like a mutual fund vehicle.
Right.
And the structure, which I'll talk about, resembles a vanilla bond.
Okay.
And I think it's very important to break down the structure of what Bharat Bond is set up, because it was designed very specifically to meet the needs of Indian retail fixed income investors. I think when we have started investing for fixed income, we always look at in how many years what will I get. I mean, these are the two questions that we ask when we are FD investors also.
Yes.
So Bharat Bond has got something called a target maturity structure, and that you may have seen, in places. There are 2 series being launched. There's an April 2023, which is a 3+ year series, and there's an April 2030, which is an April, which is a 10-year series. So if I buy April 2023, what will Bharat Bond do? Bharat Bond will buy bonds maturing on or before that date in April 2023, and it will hold them to maturity. What does this do for you as an investor is that if you hold the Bharat Bond ETF through the life of its issue till April 2023, then you have reasonable certainty that if the index is saying this is the yield, this is broadly what I'll get. You don't have to worry too much about, is it a good time to enter? RBI has done this has happened, rate policy, all that. In the middle, yes, there will be rate fluctuations. But if I hold for the life of the fund, I'll get what I thought I would get with reasonable, clarity.
Yeah. But can I get in at any time, or do I have to buy it in the NFO period?
Obviously, the NFO period is the main offering. There will be liquidity after that on the exchanges. So you can buy Bharat Bond on the
exchange, like you buy a stock.
Yeah, so you can buy it from your broker on the exchange, and we certainly welcome that. There will be a mechanism of market makers put in place on the exchange to help liquidity in the Bharat Bond issue, because we do want customers to see adequate liquidity when we go to the market.
Okay, we will discuss a little bit more about that a little later, but before that I wanted to just talk to you about some of the products which have a similar risk return option for investors, because what happens is you look at all this and you say, why should I buy the Bharat Bond ETF? So there is a fixed deposit which has the kind of, that target return. I want a 3-year fixed deposit, or 5-year or 10-year, whatever. And then there are bond ETFs which you spoke about earlier, and bonds themselves. So these are the 3 things. Just, very briefly, not getting into too many of those details, but how does this bond ETF fare against these?
Sure. So I think great 3 examples. Let's start with FD. So FDs also have a similar target maturity kind of structure. FDs do not enjoy the tax benefits of Bharat Bond. So Bharat Bond has taxation with indexation. So you pay 20% taxation with indexation, essentially over the prevailing rate of inflation. There are some beautiful calculators on our website that show that for an equivalent return on FD and Bharat Bond ends up being significantly more tax efficient. Plus, it doesn't have the breakage penalties of an FD.
Okay, so if I want to withdraw earlier, I can
do it any day.
Sell on the exchange.
I can sell on the exchange and just do it any day. So I think that's the most important advantage versus an FD. The second one was individual bonds. I think individual bonds, there are 2 challenges. One is that you're buying one bond. Bharat Bond ETF is diversified.
So diversification is
always good. The more important issue is that it's hard to buy bonds.
It's hard to buy bonds.
Even for an HNI, it's hard to buy bonds. For an average investor, the ticket size to buy a bond of NABARD or NHAI, because most of them don't do public issues, is often as high as 10 lakhs. So the barrier to buying bonds is very difficult, and that's what Bharat Bond aims to solve.
Especially, I think bonds of this quality, public sector issue.
AAA public sector, it's just very difficult.
You get the NCDs of AA, AA plus, etc. But those are easily accessible. But I think these ones are hard to...
These ones are hard to access. The third one was versus bond mutual funds. I think there are a few advantages. One is Bharat Bond ETF, because of the index, is far more transparent than bond mutual funds. So you have, I don't think any bond mutual fund which is only committed to AAA CPSC. There are banking PSU debt funds, but it's 80-20. This one is clear and complete. The second biggest advantage for an investor is cost.
Okay.
You know,
I read something, many zeros, a point, many zeros, and it just seems too low.
It's a small number.
Yeah.
So an average bond mutual fund in the direct plan is about 25 basis points, and the regular plan is about 50 basis points, and I'm talking on the lower end. There's some as high as 1.5%. Bharat Bond is priced at 0.0005%.
Right.
So if you want to translate that math,
tell me per 100 how much.
I'll tell you per 2 lakh, which is a retail lot.
Yeah. Okay.
1 rupee for 2 lakhs.
1 rupee in cost for 2 lakhs in a year. So
in a year.
Paying 1 rupee cost in a year.
2 lakhs.
Wow.
It is the cheapest mutual fund product in India.
Okay.
And it is the cheapest bond fund in the world.
Wow.
Even US funds are at 0.02.
So cost, there's no argument.
There's no argument on cost.
Yeah.
And
you
cost matter.
That in. Yeah, of course
cost
it matters.
matter in fixed income.
Yeah, and also because you're going to be holding it for either say 3 years or 10 years. And then
so
the
50
cost
basis
really
points
matters.
a year is 1.5% over 3 years, and over 10 years, so you can do the math.
So in that prolonged period, the cost really does matter. That's true.
Yeah.
So great. So there is, as we were talking, there's liquidity, there is the cost advantage, and there is a taxation advantage.
And the safety and return predictability.
Safety, yes.
I think safety for me in fixed income comes first. When you do fixed income, when you've done FDs, when you do that kind of thing, you want your money to be safe. And I think as our FM also said in our press con, we're picking the best basket of issuers.
Okay, so coming back to that whole market making and liquidity, now this is a concept which is not very simple to grasp. If you're a individual investor, or even if you're in the industry for that matter. So I just wanted to understand this a little bit. And so what this means is that if I take, I've got 10 units and I want to sell 2 of those, and there is no natural buyer, then there is this mechanism called market making, where a market maker is going to buy those 2 units from me if I don't find a natural buyer on the exchange, right? Now, of course, this mechanism has been in place for a while, and we've seen with the equity-linked ETFs, which are already in the industry, that it works sometimes and sometimes it doesn't. Anything different that you're doing this time to sort of enhance the mechanism?
So one is, I would say that both us and the government of India are very committed to liquidity in this issue, because the purpose of this, and you heard this in the FM press con also, is to deepen the corporate bond market in the long term. So liquidity is of prime importance. We've done a few things that have not been done in past ETFs. One is that we've said that there are 2 mechanisms of liquidity. You can either go to the exchange or go to the MC. What happened in a lot of past ETFs is the ticket size to go on the exchange and the ticket size to go to the AMC was the same. So nobody actually went to the exchange. Because if I can go directly to the AMC, why would I even bother? Here we are saying 25 plus crores comes to the AMC. Everybody else goes to the exchange, which is why there's a reason a market maker would actually want to be in this business. The second nice thing that has happened is, so a market maker, you give 1,000 rupees, I give 1,000, he buys inventory. So we are all trying to sell 1,000 rupees each. He collects 1 crore of Bharat Bond, and then he gives it to the AMC. The AMC gives him cash, the AMC sells bonds in the market. He has to hold that inventory of bonds till he collects a crore. The good thing is that RBI has made units of of debt ETFs in general, repoable. So the cost of market making is actually, and this is a little technical, not very high. The cost of holding inventory is actually not very, very high for market makers. So that's another regulatory mechanism that is being put in place. We are also doing quite a bit of work to deepen liquidity in these underlying bonds that Bharat Bond holds. Bharat Bond holds underlying bonds. We are going to make sure we are not the only guys who hold these bonds. We will do reissuances in the same series of Bharat Bond. So a lot of mechanisms, and the issuers are also committed to hopefully adding and doing other activity in these bonds. So these bonds are just not for Bharat Bond ETF. And that is important. So liquidity is something that has been thought through and talked about for months and months in the development of Bharat Bond ETF.
Because if the retail investors to get involved, then they want to sell on the day they want at the price that is prevailing in the market. So I think that commitment is
important. I should also mention for our retail investors, there are 2 options out there. Retail investors have always worried about ETFs because I don't have a demat account.
Demat account is that.
We are launching in parallel a fund of funds. So that will invest in Bharat Bond. It is not going to be expensive. It's just going to be IAP plus 2-3 paisa of OPEX. It will be less than 5 basis points. So it will be very, very low cost. Cheaper than your liquid fund also. So it will be the cheapest fund of funds, I think, also out there. So retail investors can choose to invest in Bharat Bond via the ETF. Or if they are worried about demat charges and the hassle and whatever, then they're welcome to invest via the fund of funds mechanism.
And then if they want to exit, then it's a simple redemption.
Then it's just a mutual fund redemption.
Okay.
So that's
then
easy.
They don't have to go on the exchange and sell or have a broker or anything, because a lot of investors don't have brokers.
It's your call, as I said, and that's why there's a marginally higher cost to do that, but you do it that way.
And both these options will be available
together.
Okay, together.
Together. So the issue will open together.
Okay, great. So that is, at least the options are there right in front.
Yeah. So you have a 3-year ETF, a 3-year fund of funds, a 10-year ETF, a 10-year fund of funds.
Now, Radhika, how do I actually invest in it? Like, can I do it on a mobile transaction app? Do I have to go to your website or the exchange website? Where do I go? How do I find this
You can buy Bharat Bond in many different ways. You can buy Bharat Bond through your financial advisor. You can buy, who can help you subscribe to the fund of funds. You can buy Bharat Bond through your broker, because all major brokers in the country will be subscribing to it. You can work with a number of digital platforms in this country, such as Paytm, Paytm Money, Zerodha, and many other digital partners who will be showcasing Bharat Bond. And you can also go to www.bharatbond.in.
There is a dedicated website.
There is a dedicated website and there is a dedicated app for Bharat Bond for both the ETF and fund of funds. So you can choose what works for you, your financial advisor, your broker, online channels, or www.bharatbond.in. The website has a ton of information. So even if you don't buy on the website, I encourage you to visit the website. It has things like these tax calculators, FAQs, videos, just a lot of stuff.
So I can just simply go buy it and then keep it till I need
And you can choose whichever variant you want to buy.
Right, that's excellent. Also now, after this launch and this first launch that's going to be there, is there more to look forward to?
So Bharat Bond is an umbrella program, as the FM kept saying, and this is not the only tranche. Bharat Bond will come again and again. The intention is right now to issue a 10 and 3 year. We'll come back with a 10 and 3 year later, again every year, hopefully. And the other good thing for investors, which hasn't been talked about so much, is that the 10 and 3 year issued today, next year will become a 9 and 2 year. And we'll also do a little reissuance in that. And so eventually you'll have a 10 year.
Fresh units.
Yeah, or fresh units. So people who want to come in for 9 years can come in. And eventually, if you think about what you'll have a 10 year, a 9 year, an 8 year, a 7 year, a 6 year. So an investor can actually do really nice cash flow planning, because right now he has no choice but to invest in 3 or 10. But my needs are not only in 3 and 10. My needs are across the board. In fact, there's a really nice concept in personal finance called laddering. Globally, which means that I basically do cash flow planning. When I do debt, I invest a little in 1 year, a little in 2, a little in 3, 4, 5, because my needs are dynamic. And the hope is with the Bharat Bond ETF series, you'll be able to do bond ladders in your portfolio. So, if I have a 4-year goal, we always say in fixed income, match your goal to the duration of the fund to avoid interest rate risk. You'll be able to accurately match year by year. So that's the vision of the Bharat Bond umbrella program. And that's good for issuers because they'll be able to borrow at different points. It's also good for the bond market because you'll have prices at different points. So that's the long-term vision of Bharat Bond.
Okay, that's great. One last thing I want to ask you, and that is on, like we were talking earlier, that the bonds pay out an interest coupon. So is there a kind of an expected yield or return that one should look forward to in this product?
So what we can guide is the yield of the index. Obviously nothing is guaranteed, but the yield of the index gives you a good sense of where it is. That yield is published on NSE's website every day. It's also available on bharatbond.in. So that will give you a good sense. I think I was looking at the numbers yesterday, and the 10-year yield on the Nifty Bharat Bond series was 7.5 or 7.6.
Okay.
And the 6-year one was some 6.6 or something like that.
Okay.
Obviously, it's dynamic, and as I said, it's not a guaranteed number,
Yeah.
but that at least gives you a sense of where you're going. And that's the nice thing about having an index.
Yes, because all the information is out there.
All the
it's
information is
published,
out there.
and it's by a third party, so it's
It's absolutely
yeah,
there.
yeah.
So BharatBond.in takes from NSE, and NSE calculates, and so it works really nicely.
Right. Great. So it's sounding very good,
Thank you.
and from where I see it, it looks like a very good allocation product for long-term debt side of the
Investors.
portfolio. If you have a portfolio, you want that debt cushioning long-term, you can easily have this, buy it, forget it, and look at it
Yeah,
when
exactly. It's the fill it, shut it, forget it for debt.
yeah, looks like that.
Hai na?
Yes, absolutely. Thank you very much, Radhika,
Thank you.
once again, and all the best for this issue.
Thank you so much.
Yeah, I'm sure it's going to be quite good.
Thank you.
So you heard Radhika, and I'm just going to do a summary of what she said. So what this product gives you is a basket of bonds which you can use for your long-term bond allocation in your portfolio. If you're just starting out with your investments, even then this is a good product to have to experience the whole market-linked investment aspect. What it also gives you is 4 basic things, which is safety, transparency, liquidity, and good taxation. Let's talk about safety first. The bonds in this basket are going to be issued by public sector entities. Hence, there is good amount of security in that because they are backed by the government of India. It is a transparent product in that you can see the yield and the portfolio at any given point in time on the exchanges, and the product itself will follow the portfolio of the index, the Bharat Bond Index. Then there is, of course, the matter of liquidity, which means that you can buy this product from the exchange at any time, and you can sell it if you want to move out of the product before the 3 years or the 10-year tenure, then you can do so at the exchange as well. Okay, the last thing is taxation. There is a taxation advantage in terms of indexation, which you can potentially benefit from if you hold the ETF for at least 3-year period. So there you have it. The Bharat Bond ETF is going to be launched very soon, and hopefully it finds a place in your bond portfolio too. Keep watching Moneypuzzle.in for all your personal finance queries. Thank you.